For those who just joined us virtually, thank you for joining us today. I'm very pleased to be moderating today's session on the future of ESG investing. Allow me a few moments just to set out the context of our discussion. Global ESG assets on track to exceed about US 53 trillion by 2025, according to Bloomberg Intelligence, representing more than a third of the projected total assets under management. As major economies deploy the green recovery plans post-COVID-19 ESG investments have emerged as a powerful vehicle that can support a sustainable economy, particularly with a new wave of younger investors who are more attuned to impact investing. With greater urgency to identify and finance solutions, this opportunity to make a positive impact with capital has never been more attractive. But how will returns be balanced with impact? And how are finance institutions responding to market changes? With this, I'm very excited to introduce to you our panelists for today. Joining us in person is Ms. Nikki Camp, who is the World Economic Forum Sustainable Development Investment Partnership in ASEAN. Joining us virtually are Ms. Chun-Yen Liu, AIA's Singapore's Chief Investment Officer, Mr. Vincent Menina, Limited Partner and Chief Executive Officer of Lombard Odier in Asia, and Dr. Daniel Kerr, CEO of Arabesque Esg and President of the Arabesque Group. Thank you all of you for joining us so much. For the audience, you can feel free to comment and chime in. Actually put in your questions in the Slido. So please do your questions in the chat boxes as we go along. To actually kick off our discussion, we're going to do an audience poll first. On a scale of 1 to 10, how prevalent, to what extent does ESG investment suffer from greenwashing? I'm going to give you a couple of seconds just to put in your answers there. 9. For 100%. How many people are doing this? Huh. Okay, that's pretty interesting, pretty split between, it's changing quite a bit. Okay, let's just wait for, say, 5 more seconds. 4. Okay, that's interesting. On that note, this brings me to my first question for all my panelists. Deutsche Bank recently made headlines after the firm's former head of sustainability said that the bank overstated how much it used sustainable investing criteria to manage its assets, leading to a drop in its share price and probes by the US SEC. Do you think greenwashing poses a threat to the future of ESG investing? I'm going to let Nikki here comment first.
Do I need to? It's on. Good. Thank you. Look, that was pretty shocking for the finance sector, and probably not terribly surprising that that was going to start to happen. So I used start to happen intentionally because I do think that there is a real issue for the ESG sector around reporting on what institutions are actually doing in ESG. And I think it stems from the fact that there has been such a plethora of different ratings and rankings. I think there's something, more than 600 different ratings and rankings, and probably still counting. Mm-hmm. And the ability to try and be consistent is very difficult for an investor, but also very difficult for the financial institutions when they're reporting. And when I say difficult, I don't think it's hard in the sense of, they can choose, basically. When you've got 600, you can choose. Let's choose which one we want to report on. The other one that was really interesting data point was Bloomberg recently came out with some data around projected ESG investment, and I think they said 53 trillion over the next couple of years, and they're of that, we're currently at 35 trillion, I think it is, and of that 25 trillion is basically ticking a box, right? So it's not actually moving the dial, it's sanitization factor. Mm-hmm. So how do we shift that 25 into action, mm-hmm. and make sure that that is real in terms of net zero, in terms of social, and in terms of governance factors. So I actually, as I say, not surprising, but hopefully it's going to be a really good wake-up call across the industry.
Thank you for that, Nikki. I'm going to go on to you, Vincent, actually, to comment on that as well.
Thank you. Good afternoon. I think we have two types of greenwashing, right? The intentional part, where the asset manager overclaim and oversell, and I think also the other one, which is a gap in terms of expectations between the investors and the asset manager. I think when the investors have a different view of the definition of green, and that the asset manager had no intention to overstate the green characteristic. I think at Lombard Odier, to reduce this risk of the company greenwashing, we strongly believe in the importance of looking beyond ESG metrics. The need to consider the forward-looking approach to analyze and quantify whether a company business model is sustainable, I think it's crucial to understand the investment risk and the opportunities, and to clearly disclose that to the clients.
Thank you for that, Vincent. And for you, Chunyan, do you like to comment on that as well?
Hi, everyone. Thanks for having me here. So I think for this news, indeed, it was very shocking to the financial industry. I think more for us to understand, because we are the gateway to our policyholders for our life fund investments and for our ILP products, right? So I see us as holding our responsibility actually to enhance our dialogues in this engagement process with our investing companies, and also when we are introducing funds or services to our policyholders through our insurance products, we also need to be very mindful of the data consistency and like my panelists saying here, to look for those signs, I think, in terms of consistency in their reporting and disclosure in our due diligence process, and also look beyond ESG to look for the signals, how embedded they are and how generic they are and how true ESG principle they are holding. So those are I would see that more as example for us to enhance our own process. So in the future, we'll be more mindful of all these issues that could create a scandal like this. Thank you.
Thank you, Chunyan. And for Daniel, I know that you do ESG data, so I think you can comment on that as well.
Yeah, I'm very happy to, and thank you for having me. I wish it could be there in person. I always love being with everyone in Singapore. I think the discussion is super valid. This is a very, very young industry, right? We shouldn't forget that we really talk about a part of the industry that is 5 years old. And I think after 5 years or so, you come to a point where you have to revisit some of the fundamentals. And I think we have three problems. One, sustainability doesn't mean sustainability for different people, right? ESG isn't ESG. And so while some asset managers, but also some asset owners would like their managers to be good stewards, right? To engage, to nudge companies in the right direction, other people think the right approach is actually to not invest, to divest, to move away. And as long as you have so many different approaches almost under the same buzzword, you will always come to a place where people have actually different opinions of what is greenwashing or not. So I think there's an element of getting clearer of what does ESG and sustainability actually mean, and putting the right words to it, because I think it's necessary to get those definitions right to avoid greenwashing claims in the future. The second, as you say, as an ESG data company, there clearly is an issue at the moment that a lot of the data is inconsistent and still quite limited, especially when we look into the Asia and particularly the ASEAN region. There aren't that many good disclosures. And if you don't have enough disclosure, we heard in the last panel, information for the financial markets is like fuel, right? You use information to signals to reallocate capital. If you have incomplete information, you won't get enough signals, and you can't reallocate capital. So one of the big things that we are doing is actually two things. We're working with something called the Reporting Exchange. We acquired it, we integrated it into our offering to make sure people are actually able to compare different sustainability standards, because only if you are able to map almost across the 600 standards we heard about before, will you be able to make conclusions. And the other topic is, I think, to encourage companies together with investors to provide better information. And that to a large degree also means helping companies to understand what ESG actually means. Because for many, many companies, this still sits in the marketing department. And I think it's now moving into the chief financial officer departments. So that's problem number 2, lack of consistent information. And the third problem that we have is sustainability data is very backward looking. Right? It's very outdated. We're looking into the past. Until we get good information about carbon footprints, human rights approaches, it takes a very long time. And so I think one of the big jobs, especially for my industry now, is to look at forward-looking information. And that can be news information, NGO information, but even more interesting, satellite data. Right? You get a much better information about a company's activity if you know how many things they're producing, how active their factories are. And all of that forward-looking information, I think, will help us in capital allocation. So I'm not defending the industry, but I think we're at a very important point now. Everybody made big commitments. Glasgow this year will be even bigger with big commitments. 1st of January 2022, nobody will care about commitments anymore. Everybody will care about show me the money.
Yeah, no, that's super interesting because, despite the challenges in data transparency and the kind of data out there, we know that ESG funds are on track for a record year anyway. So, Nikki, how have you seen financial institutions reacting to this upward trend in ESG and impact investments in ASEAN?
Yeah, it's a great segue into, something that is, what does the data look like? And one of the sort of areas that I want to dive into is actually the fixed income market, because it's where we're seeing green bonds and sustainability bonds and so on. Now, recently, Bank of America updated their full-year forecast on this collective sector from $750 billion for the year to $900 billion for the year, so the trend is there. But let's get the perspective. That's less than 1% of the global market. So we're still, to Daniel's point, very much a young sector, and it's still growing. If you delve down into that, what is really interesting is the extent to which it's growing beyond what I think a lot of people recognise, which is a green bond. Right? And if you look at the growth in the green bond market, it's been 2 times since last year, pretty good, up to $250 billion. Sustainability bonds, which we're looking at green and social projects for sustainability bonds, Sdg bonds, similar concept, more than 2 times, but only up to $90 billion. So still small. Sustainability-linked instruments. So this is where you link the performance to the cost, so the interest rate. So basically, an interesting sector in this regard was the airline industry, which of course none of us really know anymore because we don't fly. But Etihad recently issued a transition bond, which was well subscribed actually, and they have various steps in order to decarbonise their business. So this is another way to help organisations not sort of having to step off the cliff, or you de-invest. If you don't meet the criteria, then we're just not going to be supportive of you from a financial perspective. And the final one is the one that was touched on the last panel, was social aspect, and this is really, really small, but growing very fast, so more than 3 times last year. What's interesting, that's global, they're the global numbers. Of that, ASEAN's about 3%, and all of Asia about 16%. So we've got a long way to go here. I see it as an opportunity, and I do hear a lot about how can we do this. So financial institutions are wanting to know how can they get on board, how can they participate either as arrangers, as issuers, as investors. So it's that's a lot of data, but it's really meaningful if you think about what the gap is, what the space is there that can be filled.
No, for sure, and that's super interesting because I think in one of the panel sessions before, we were seeing how Asia is going to see a biggest boom in that because a lot of the younger investors are now going on to being the lead their family companies, of these big companies as well. So we're going to see a change in that and that kind of trend. And I guess Vincent as well, for you to comment on that. How do you see this trend going forward? Are your clients or investors looking for more from you, from Lombard Odier?
Yeah, I think what is very important here is to differentiate the impact investing, and the perception that people have that you have to compromise on your returns. And on the other hand, the sustainable investments. And we believe that the sustainable revolution is the single largest investment opportunities of our lifetime. And that's very important. And I think the point that you mentioned, Megan, about the next generations, and we know that we are in a region where a lot of the entrepreneurs are first, second generations moving to the second. Obviously, the demand is extremely high. We discuss about the investment that have to be done. I think only in the energy we estimate it's 5 trillion per year that will be invested until 2030 to reach our objectives. But it's true for all the kind of SDGs that we have. We believe also that it's very interesting that we can engage with the clients, and we have, I think, clients that are sensitive to 5 main themes, right? Of course, the climate change, the resource management, the preservations of the natural environment and the biodiversity, the reduction of inequalities that increased a lot during this COVID period, and the human rights. I think each clients are different, right? And we should design, and we design tailor-made solutions for these clients where we can analyze the risk return and maximize the positive impact. We believe that investing in sustainable investments will improve the performance of the clients' portfolios. We have no doubt with that. And to come to your point also, we did recently, last year, a study with over 150 ultra networks individual in the region. And it was very interesting to see that, and in the region, because we have Lombard Odier strategic alliances in the region with 6 local banks in Thailand, in the Philippines, in Indonesia. So we participate really for the entire Asian region. And it's interesting to see that 89% of the participants believe that sustainability is a theme that will remain and increase. 61% already of the participants will consider sustainability when they are doing their investments. And 1/3 of the participants, and it's much higher for the new generations, will take that in consideration when they choose their financial partner.
Actually, I'm building on that. I think it was in the same study, about less than 50% of that was willing to act on that because of, the risks that are associated with such investments as well, and they're not sure whether the returns will match the impact as well. So Daniel, I see you smiling over there. Do you want to comment on that?
Yeah, actually, I think that is an important point, right? A lot of people say they want to do things, but then fall back into existing patterns because I think we are all people that need a while to be convinced. But I had a slightly different point about, I think, the uptake of ESG in Asia, and maybe a slightly different view on this. I think there's a real risk for companies, especially in Asia, to be left out. Right? So if you think about ESG integration, it means you use ESG data to reallocate capital. We talked about this. We see it coming. You quoted all the asset management statistics that you mentioned before. But that means capital will go to companies that have good ESG profiles. Companies that have good ESG profiles are companies that have been, let's say, playing with the ESG concept for quite some time. And if you look at it at the moment, that is mostly companies in well-developed markets. It's in Europe, it's increasingly in the US, although the US is behind, and it's in the more developed parts of Asia. So I think there's a real risk of a disconnect. More and more investors in Asia wanting to go into ESG assets, but actually the ESG assets sit in developed markets because that's where you have the data, that's where you have transparency. And so I think there's a huge job to be done for the financial services sector in Asia to help the real economy understand the concept. Because if you don't understand the concept, you will be left out. And so one of the big pieces of work that we are actually doing is is together with one of the big development banks, try to find ways to encourage and support companies especially in Asia, but in developing markets more broadly, to understand ESG and to provide more information. Because otherwise, capital will just move around them.
Mm-hmm. No, I agree with that as well. But Nikki picked up the mic about halfway through speaking, so I'm going to go to Nikki and then Chunyan, we can get to you.
Look, very briefly, there's a great statistic that recently came out from Esg on emerging markets ESG leaders index, and that showed that ESG is actually really is a source of alpha. So there's on regular emerging markets returns across the market 10.7%, pretty good. Emerging markets ESG leaders index 14.5. So there's a 3.5% alpha on ESG, just adding ESG. So I wonder if there's a branding problem for Asia, for emerging markets, if you like, because there's data there. It's just, is it being marketed well enough? Perhaps, I don't know.
We can get to that later on. But to Chunyan, actually, Daniel said something about using ESG to allocate capital, and I guess in your experience as Chief Investment Officer of AIA, how have you seen that happening?
Hi, thanks for the question. I do believe, rather than actually AIA, we believe that sustainable investment will perform better in the long run. I think if you think about life insurance business, we are providing protections to our policyholders for 99 years, or nowadays actuaries will do 122 years of cash flow projection. So that's how long our liability is. So our assets are to support that product development, support our policyholders' commitment. We definitely have to look into companies' investment that's very, very sustainable in the long run. So it's really gelled very well with our fundamental business model. On top of that, our brand promise, healthier, longer, better lives, actually is to use our company's influence to promote healthier lifestyles. So from that point of view, actually the sustainable investment, which is one very particular important pillar in our ESG strategy for the whole group, gels very well with our underlying core business, which is providing sustainable life protection and health protection to our policyholders. So this two gels very well. So to us, it's a very natural way to think about how we invest, definitely sustainable investment. So in terms of those capital deployment, I think that in AIA, we don't take the approach of optimizing a particular parameter. For example, ESG score or sustainability score in order to come up with our portfolio construction, in order to deploy capital. The approach we take is actually embed that in our business decision-making process. For it to be the insurance product we are developing, for it to be the investment thesis construction, every step along the way we consider ESG. So that's how we approach this. So in terms of the the deployment of the actual investment, on top of all the traditional asset classes, fixed income, equities, and all that, we do look at long-term projects, try to support those long-term projects that makes commercial sense to us and encourage sustainable investment as well. So that's one area. And also recent months to a year, we are venturing into building up private asset investment. And from the private asset investment, we look at a lot of underlying projects, a lot of renewable energies or infrastructure, and try to source for the most appropriate investment to support sustainable investment and also for our insurance product development. So there's really no one particular sector that we are focusing on, and we don't really focus on impact investing either. It's more of embedding our sustainable investment principles in our investment decision-making process, and also look for long-term projects that support sustainable investment as a strategy for our whole group and whole investment portfolio. Thank you.
Thank you, Chunyan. Vincent, I'm going to go on to you. I'm not sure if you wanted to comment on Nikki's statement that maybe there's a problem with the branding of ESG. You can go ahead with that first.
The branding of ESG in Asia, you mean?
Yeah.
That comment? Yeah, I think it's a very interesting comment, and I have to say that being every day in contact with entrepreneurs in the region and in different industry in all the region, you realize that I've been here in Asia for 20 years, and you realize that we are absolutely not late compared to Europe and US, in my view, when you start to talk with entrepreneurs. But on the point of Daniel about the investments and the risk for Asia for the companies, I think this is where the approach forward-looking is crucial, right? Is really to look at these companies for the future, right? Of course, when we look at the investments, we look at the how companies operate, the what they do. But I think it's very important also to take in consideration the where, and to take the region, the development of the region on this. And we strongly believe that the potential returns in the companies that are in transition for the future is extremely high.
Thank you for that, Vincent. And Daniel, do you want to comment on that as well?
Well, I think my co-panelists said it well. I spent the last 10 years at HSBC, where I was first leading strategy and then built this business, based on the belief that this is going to be the biggest revolution of capital markets. Right? This is not a risk or reputation play. This is the biggest growth opportunity that we collectively have. And on that basis, it is very, very clear that this will create the next big winners. So I think everything that Vincent and Gian said is something I absolutely subscribe to. There will be bumps on the road. Some of the bumps on the road are the greenwashing debates that we just had. But there are a few others. I think we talk a lot about transition. I think we still struggle to get really into the core concept of transition. Right? People like to talk about something that is very green and something that is very brown. We know that the core of the economy, 95%, is olive. Right? It's somewhere in between. And I think working out what actually does it mean to be on the right transition pathway? What does it mean to be aligned to net zero or other commitments? And then to understand, will these companies actually make it? Because I think, bear in mind, many, many companies will have to invest in two technologies in parallel. If you're a car manufacturer, you have to build electric while maintaining your internal combustion engine. If you're an oil and gas company, you will continue to invest in oil and gas for some time while building out your alternative energy sources. And that, for many, many companies, is the strain on resources. And for investors, it often means that they may have to sacrifice some dividend for a period. And actually, I think that is something where the debate will become a lot more educated, where the debate will become much less black and white or green and brown, and will become a real financial resource allocation. And again, from my new industry perspective, from the ESG data and investment perspective, it means you need more information, better information, more forward-looking information, as Vincent has just said. Otherwise, you're just looking in the back mirror. I always say, if you're a good investor, if you're a good bank, you want to build a balance sheet a decade ahead from now, right? Of the economy a decade ahead from now. Most financial institutions still have a balance sheet that resembles the economy a decade ago. And that, I think, is the big change. And for that, you need more intelligence, more models, better data.
On that note, I think I want to go a little bit into impact investing, which I think is, discussed as a strategy for tackling the world's most pressing economic, ecological, and social challenges as well. Nikki, what are the major obstacles you see in scaling impact investing?
Well, impact investing at this stage is still considered terribly niche. I shouldn't say the word terribly, but it is very niche, and carries with it the implication that you're going to forego returns in order to gain impact. I think there is a degree of truth in that, in the sense that we don't properly value impact in financial returns outcome. And this is where the look forward, I agree, is so critical, because if we can't evaluate what the systemic benefits are going to be for example, one of our members recently was showcasing an innovation in a financial instrument around women's livelihood bond, and the financial returns were modest. But there was a floor under them, so they were to get that financial return. But there was more than a dozen very clearly articulated impact measures that were put in place across 4 different countries in this region, and not one of them had a financial outcome attached to them. And I think that's where there's a gap. That's where there's an opportunity on saying, what would that look like from an economic perspective if those particular impacts were evaluated? And I'm not sure we're ready for that yet, but I think that would be really a really helpful thing. The other is just sort of stepping back to sort of a point that was made in the last panel around data, if I can. I know it's contentious, but one of the things that we have constantly talked about at Forum is that it's not so much a problem about availability of data, but it's the consistency and reliability of data. And this is the verification point that I think when you bring in things like satellite technology, when you bring in technology to measurement, consistency using blockchain, for example, so there's immutability around data replication and duplication, that there's really an opportunity there. So if I can flip that from what are the barriers, what's the opportunity? I think there's a real opportunity there. And the last one that I wanted to talk about is the taxonomy. And I don't think that there needs to be a global taxonomy around, and I don't think there can be. But what I do think is for there to be an understanding of the same language. So how do you then apply that into a particular market that is relevant to where the market's maturity is and relevant to the needs of that market? Like, for example, here in Asia, there's a strong E element, but there's also a strong S element, then leave no one behind. And of course, the very strong G element. There's perhaps a different weighting in Europe around those. So maybe there's, and I think that's one of the things that I know is being worked on here in ASEAN, and it's been a question as to whether or not that's just going to be an adoption of Europe's taxonomy. Do you create your own? I think that's definitely the case. There will be an ASEAN taxonomy. So there are also policy initiatives that can be put in place, etc. And there's a whole lot of examples in other parts of the world that could be reflected into this region. But there's some of the ones that I think are really important. Some of the things that we've been working on at the Forum is through a think tank on Sdg Investment around how do you shift the scale, shift at scale, and potentially creating an asset class around this. So how do you define an Sdg investment? And leads into, it connects very nicely with the taxonomy concept. And if you could make that easier, because of course in all of SDG there's embedded impact. So if you can make that easier and more transparent, then it becomes more easy to scale. So that's kind of an example, if you like, of what we're trying to do in order to shift that market.
Yeah, no, that's interesting because we just launched the SDG codes this morning as well, where we seek to be, an innovation platform, to connect technologies, investors, companies from all over the world. But for Vincent, actually, I wanted to go back to the point on, impact investing and data, and I guess, how you ensure that returns are balanced with impact, especially since, this is, I guess, the more commonly viewed perception of impact investing is that, you don't get anything back, and obviously priority is for the impact. How do you, speak to your clients about this who are interested?
I think, as I mentioned before, I think we have to very differentiate the impact investing with sustainable investments, right? To do well and to do good is one thing, of course, and we can see the trend is here. On our side, we really believe that investing in sustainability is in order to increase the returns of the portfolio of our clients, right? I think Nikki mentioned the four, we define that as the four powerful forces at work, right? Of course, we have the policies and the regulations that defines the framework. We know that today 80% of the world economy is now subject to the net zero targets by the governments. What is very important to see is the market forces, the technological and innovations, and the economies of scale driving down the cost of the circular economy. Today, I think the circular economy, what we call at Lombard-Odier the click, right, which is the circular, lean, inclusive, and clean economy, is cheaper and becomes more and more cheaper. It's clearly an impact. And then we have, as we all know, the consumer demands that has changed, right? Today, and I can see with my boys that are 16 and 13, you know, when you have packaging in plastic or when we talk about the next car, believe me, this is exactly a different challenge compared to, to when I was discussing with my dad, right? So no doubt the consumers is changing and changing everywhere. I mean, unfortunately, I've not had the chance to travel to Manila, Jakarta, Bangkok recently, but I remember very well 2 years ago, that was there already, right? And finally, there are the investors. And as I mentioned before, today, based on our study, 63% of the investors are taking in consideration sustainability in their investments. Of course, then we need to measure, and we have the benchmark to measure the returns and showing that it provides superior returns.
Thank you, Vincent. I think this goes on nicely to Daniel to comment on as well.
Yeah, I wanted to come back to one of the discussions that Nikki just brought in. I think actually it is quite dangerous if we end up with very different taxonomies, because we just repeat the problem that where we started our discussion today on ESG, right? I think we need to agree as a world which technologies are actually part of the future and which aren't. And that's what the taxonomy is trying to do. There's then a different thing about the pathway. And I think that leads me to a discussion about, I think, COP this year. Everybody is now making this major net zero commitments, right? This year will be the year of every nation, every company, every investor making net zero commitments. And I think that the critical point is now to agree, what is a credible pathway? What is achievable within this decade? Because if you look at the IEA scenarios are quite clear. You need to reduce the carbon footprint of the world by 50% this year, which is a huge number. And we can't achieve it if different regions approach us with different measures. And then there's a really, really important link to negative emissions and biodiversity, which I think many people forget. And that comes back to I think, your question. A big part of impact is actually trying to understand how big concepts like the energy transition impact some of the major, let's say, collaterals that sit around. Biodiversity certainly being one of the biggest ones. Being able to measure that is one thing, but being able to agree actually what is a credible scenario? Are we now all using the IEA 1.5 degree scenario, and are we allocating capital along that? Which means net zero by 2050, which means very limited use of negative emissions technologies. All of those, I think, are the big discussions we need to have now, because then capital markets can start to do its work.
Thank you, Daniel, for that. And for Chunyan, for you to comment on as well, but also, how should companies actually demonstrate to investors and clients, that they are actually serious about ESG investing in this new kind of environment where, there's so much uncertainty, it's there's little data, the transparency of data is an issue as well. How is EIA dealing with that, and how should companies then deal with that as well?
Sure. So we are institutional investors in AIA also. we are dealing with retail customers. In the general feeling is, ESG is something to feel good, to do good. I absolutely agree with what Daniel, Vincent mentioned, those practical challenges. It is important to explain to our stakeholders, our customers, what is ESG, what does that mean, and how would that help the investment performances in the long run? How would that help companies like us to support very long-term commitments to our policyholders? So that dynamics, it takes time to raise the awareness, to educate internal key stakeholders and external clients. So what does that take for a company to be to say that we're serious about ESG? On top of planting all the trees in Singapore, as it's a whole government initiative, we're all planting trees every single day. On top of that, right, it is fundamentally what's relevant to our customers here in Singapore. How do we demonstrate that, in AIA we're so serious about it, not just greenwashing our customers. One is that, the company itself, we have to demonstrate not just E, but as energy, that's how we treat our customers, how we treat our employees. So from there, right, I would like to just summarize a few points as to what the current developments are in AIA. One is that definitely ESG needs to be embedded in our key business processes. That goes into investment decision-making process. That goes into strategic dialogues. Every year we talk about strategies for AIA for the next 5 years. So we do publish reports, ESG reports, articulating what is our strategy and what are our commitments. Yeah? And then the third thing is actually to follow up. So regularly we do have a lot of review, and we also have committees and governance body in place to review the progress against those targets that we committed. I think the final thing is really to build up the capabilities in our company, also with our agents, and educate our consumers as well. So there are a few areas. One, disclosure. We will talk about how important disclosure is and how crucial it is. So disclosure definitely to improve the transparency. I think from there, actually, AIA is, has joined a lot of international bodies to move the transparency forward to the next level, especially in Asia, where we operate, 18 markets. So different developments in terms of maturity in different markets, but we are very focused on our local markets disclosures, and that will all be consistent with our group's guidelines. So increasing disclosure, transparency is important. I think the second one is really what I just mentioned. Set the targets and commitments. Of course, that has to be relevant to our business, has to be relevant to our investors, to our policyholders. And third is really to embed practical considerations, ESG considerations in our business processes, key business processes. So whenever we're making decisions, for it to be insurance product development, for it to be customer service, for it to be operations, for it to be investments, we all need to have ESG as the necessary consideration in that thought process. So those are the key elements that I think would demonstrate how serious a company is towards ESG.
Thank you, Chunya, for that. I think this kind of segues quite nicely into the Q&A session that I'm going to take from the Slido chat. So for our audience here, you can put your questions in for the virtual ones as well. The first question I'm going to take, I'm going to direct this to Vincent and then Daniel. What would be the most effective carrot or stick approach to improve the quality of investment decision-making and ESG data? Vincent, you want to take that first?
Sorry, I didn't get the question, so can you repeat? Sorry, please.
What would be the most effective carrot or stick approach to improve the quality of ESG investment decision-making? And then the ESG data part, I'll go on to Daniel.
The most important...
most effective carrot or stick approach.
Stick approach. That's a very good question. I let Daniel maybe start with the data, and then I come back to you.
Yeah, happy to. I mean, for me, it is quite clear, right? The carrot here is access to capital, right? And the more we have better information, companies disclosing better information, the more access they will get to capital. So the carrot here is very, very clear. Every board, every CEO, every chief executive of any company should be looking at ESG not as a reputational marketing effort, not just, some of them will always do that, but should look at this as the ability to attract more diverse, more forward-looking, more engaged, and in the end, better investors that will stand by a company's transition pathway. That's the carrot. Well, what's the stick? What's the stick of poor disclosure, poor information, and in the end, poor ESG performance? The stick is shareholder engagement and votes at AGMs. Right? If you look at what happened recently, especially in the US and increasingly in Europe, investors are taking their opinions, their views on ESG into the next annual general meeting and are voting down, management teams are voting down boards. And if you are the chairman or the chief executive of a large firm, this is the worst that can happen to you. For me, that's the carrot and the stick. ESG is at the absolute core of these two discussions. And with that, with better data, with better disclosure, I think you're able to manage that in the same way as decades ago, people started to use financial information to manage their investors.
Thank you for that, Daniel. Vincent, I'm not sure if you could hear me before, but...
Yeah. No, I think, and thank you, Daniel, for helping me on this one. But I think we need to move away from the analysis, focusing only on the shaming of the companies. I think that's very important. And that's a high emitting today, instead of embracing a more forward-looking, as we mentioned before, perspective, where we identify what companies are fit for the transition and the ones that are not fit for these transitions. But again, the shaming will not help all.
Thank you, Vincent, for that. I'm going to go on to you, Nikki. This one comes from the Slido. My understanding is that one of the biggest challenges of ESG investments is the concern of tracking compliance with ESG metrics. Can you share your thoughts on this issue with us?
Yeah, for sure. In fact, there's a really great project that's going on at the forum's leading together with the Big Four accounting firms right now on, I mentioned earlier, the 600 odd and counting ratings and rankings around ESG and the challenges that represents for companies and for investors, financial institutions and retail investors. And the project is basically to say, how can you rationalise those into something that is really easy to digest but meaningful, so that it doesn't end up being too high level. And I think that the attempt is to get it down to 21 core rankings or ratings, if you like, and to present that to the market. So watch that space, because I think that there's some really great work that's going to be done on trying to rationalise that across not just emerging markets. This will be across a global initiative.
Thank you for that, Nikki. And for Chun-Yen, what mechanisms could be deployed to help investors overcome fears around the risk of return? Or also, how do you begin to reduce the risk of investing in ESG products?
I think the fear is quite understandable. I think Daniel mentioned earlier on, it's a very young industry. We can call ESG an industry. It's a young concept. So it's very natural for people to question if it's a feel-good factor without compromise the performances. So as investors, the way we approach this is really not to focus on the performances per se, and really to understand why are we doing this, the purpose, overarching purpose, and the bigger environment, in terms of the urgency of us to embed this principle in what we do. So once people understand the purpose, and then the next one is to really dissect and explain the dynamics. I think we passed that stage already in Asia. If I can speak for maybe just for Singapore, I think we passed that stage already to still suffer from this myth of sacrificing performances because of ESG. I think we passed that already. I think it's more of how do we accelerate the transition. And I think the market development, providing more products, providing more solutions to investors will help definitely, and also providing consistent data. So investors can clearly see that there's no sacrifice of returns because of embedding ESG. Actually, on the contrary, if you lengthen the time horizon, like what Vincent mentioned, have forward-looking view, you can actually see it will generate superior returns compared to our current approach, whereby ESG is not a key component. So it's more of that communication and also the understanding of underlying data. That's why it's very important to join force among different companies in the industry to demand more solutions and more services providing to the investors for us to understand what are the choices we can make and how do we leverage on this platform to actually improve the ESG sustainable investment.
Thank you, Chunyan, for that, and for Vincent.
Megan,
go, Daniel, go ahead.
So if I can just add to this, I think it's really important for the end investor to understand that ESG, I think, fulfills three purposes. It helps investors pick future winners. Right? You want companies with good ESG credentials because those are companies that are better managed, right? More diverse boards, better treatment of customers, better treatment of employees, all indicators that identify future winners. But ESG is also a risk management tool. Right? You want to avoid future downsides. You want to avoid the next big scandal. You want to screen out corruption scandals. You want to screen out human rights scandals. You want to screen out major environmental issues. So while it is a return-enhancing measurement to identify future winners, it is also a risk management tool to screen out future issues. And then the third thing that ESG does is it helps you to measure impact, right? Which is a completely different discussion, but you use the same data then to assess performance against SDGs, performance against climate targets. And so I think it's quite important that people understand almost these three purposes that you can fulfill with ESG data, and all of them obviously come together in a good investment product.
Thank you, Daniel. And Vincent, would you like to comment on that as well?
Oh, no, actually, I agree with Daniel. Obviously, this is exactly the view that we have. And at the end of the day, we define that on our at Bloomberg between the eagles that are really the company that are embracing these transitions and are really into transition, for one looking always, versus the ostriches that will be the companies that will have difficulties to go through that transitions or will not be able. And at the end of the day, the reality, what I believe, is that they will not exist anymore if they don't do it. And that's the final stake, most probably.
Thank you, Vincent, for that. I wanted to go back to that ESG data challenge. We know that this will continue for as long as regulatory requirements and investor demands kind of change over time. So Daniel, I guess what is one major development that you hope to see from the financial technology industry to assist better ESG in decision making?
Yeah, I think one of the big topics in the ESG space, and we talked a lot about many of the challenges, but I think one of the big challenge that we didn't discuss today is that actually ESG information is quite hard to access. Right? ESG information at the moment, first of all, sits in many different places. When you want to understand the financial information of a company, you go in the annual report. ESG information is a bit everywhere, right? On marketing pages, in ESG reports, in CSR brochures. So there's an element of consolidating it, but more importantly, making the information available. And if you're an end investor, it is very hard for you at the moment to actually understand the ESG profile. So I think one of the big topics that I have on my agenda, and I'm sure industry colleagues will share that with me, is to make ESG information a lot more accessible to the end investor. And to almost unpack what it means, ESG, right? Because for us, ESG is now a term that we all get and we understand and we've studied it. For the end investor, ESG is just an acronym, right? It's just 3 letters because everything is in there. It's from Black Lives Matter to how we deal with nature. There's so much in there. We need to help people understand it and make it real, because people love the concepts but don't like the way we take this into our financial language.
Thank you for that, Daniel. And for Nikki, do you want to comment on that as well?
Yeah, I'm nodding because it's I get accused all the time of using financial sector jargon, and let's make it real. The other thing that I think is really helpful is we're seeing a huge increase in individuals, retail investors, so people wanting to access this sort of information for themselves, and it's we know that there's a huge amount of information that is available. You just have to do a bit of a search, and you'll come up with arabesque information and Lombard information and AIA information quite easily about various different investments. But what's difficult is, and I think it's exactly what you were saying, Daniel, is the way we say it, the way we present it. So it's not so much the what it is that we're reporting in the ESG, but what does it really mean to me if I come along and I want to invest $100 somewhere? So what? What am I going to get in a year's time, or 2 years' time, or 10 years' time, depending on my investment horizon? And I think we can do a lot better with that and help people bring it down, bring it to a language that most people understand, rather than our funny financial jargon.
I totally agree with that. Actually, this brings me very nicely to just one more question for everyone here. We've been talking so much about institutional funds flowing into ESG investments. How can we make ESG investments more accessible to the retail investors, to the masses? I'm going to start with Chunyan.
Thank you. That's a very relevant question for me. Our target consumers are the public. So for us, definitely, as my fellow panelists just mentioned, has to be relevant to the consumers, to the public. I think ESG will not be a successful initiative if not everybody join the force. If just us, the institutional investors, are focusing on this, I don't think it would be a successful initiative for everybody. So how do we actually introduce that to our customers? We started to think about what do customers need. For the customers who plan for their legacy, plan for retirement, any long-term saving needs, right, with the insurance company, I think that's where we think is the best angle to roll out ESG products, because sustainable investment definitely can support the concept or the needs of retirement, legacy, and just long-term savings. So that's why, in our own insurance jargon is investment-linked products. That's whereby we focus a lot of our efforts to introduce to our end consumers a series of products that promotes sustainable investment and ESG.
Thank you, Chunyan. And to Daniel.
So I think to make this real for investors, you need to make it visible, right? On my phone, I have my pension fund, I have my investment portfolios, but I don't have any ESG information on it, right? I would love to go on my pension fund app and understand, obviously, my financial performance, and people do that, right? But you also would like to actually see your impact, your ESG profile. I don't think any of the big pension funds, insurance companies, asset managers really do this, right? Everybody made big commitments. It is now making it real. And I'm not accusing anyone, because it's a matter of time. But I think that's the way you engage the end investor, you make it real. You put ESG information at the same level as you put financial information today. And that's not the case yet.
Thank you, Daniel. And I'm going over to Vincent.
I think I fully agree. I think to individual investors, I think we need a full transparency. And I would be very concrete here because it's what we are doing, obviously, every day with our clients. I think this is, when we were explaining private equity funds, we were taking the companies and explaining why we invest in these companies. I think sustainability is exactly the same. We need to give examples. We need to be extremely concrete the way we present that to the investors, because I think, and we can see that, when we have discussions panel like this, it's quite technical, right? When we go to investors that are entrepreneurs, that their day-to-day is to focus on their business, and we talk investments, we need to be very concrete with very strong example. And to point to the point of Daniel, and I hope I will see you soon, at Lombard, our clients will beneficiate pretty soon of the carbon footprint of their portfolio. So as much as we can show the performance, the risk factors, the volatility of a portfolio, we will show them the carbon footprint and the temperature of their portfolio, which I think will also engage more and more in terms of discussions with our clients.
Thank you, Vincent, for that. And to end off, we have Nikki.
I want to be really quick on this. I think that there's a really fun aspect to this and really a lot of innovation going on. And there was something that just came across my desk this week, announced by the New York Stock Exchange. I don't know if everyone saw it or not, but there's this new asset called a natural asset company that's going to be listed. And, you can now invest, well, when they launch it, you can now invest in something that you just haven't had access to before, which is impact on the natural environment. And that I want to leave it with that example because I actually think we've got some really exciting, innovative ways in which to engage individuals through our phone apps and our pension funds and so on, but in ways that don't just tap into traditional asset classes, that tap into things that are really that mean something to us in an impact sense.
Thank you so much, Nikki. And with that, on that note, thank you all for tuning in to our plenary discussions. Thank you, Nikki, Vincent, Daniel, and Chunyin as well for being a part of our panel.